might do now is just throw to Roger Montgomery and get him to tell us what are the things he looks for in a growth stock.
And welcome everyone, by the way, and nice to be joining you. The starting point for a growth stock is not necessarily the past. And in fact, it's not always the case that the past is a representation of the future, although we think it's often a reliable indicator of the future. If a company, for example, has a sustainable competitive advantage, then by definition we believe that the numbers that competitive advantage has displayed in the past is going to be sustained. And so we believe that it's going to continue. But that's the point. It's not in the data itself, it's in the identification of the competitive advantage where we find a company's ability to be able to grow its equity and grow its profits. So many people look at the numbers, and it's vital to do that. And that's what Skaffold does for us. It helps us isolate the universe of companies where we might find the thing that drives the growth. And the thing that drives the growth is this sustainable competitive advantage. So it was interesting looking at the survey results that we've just completed, and nobody thought basic materials was a growth sector, and most people thought healthcare, putting aside the fact that that's reflected in the prices of these stocks at the moment, whether they're expensive or cheap. The reality is that's not enough to determine whether or not a company is going to grow. Within each sector, you have to look for companies that have some competitive advantage. So that might be, for example, a monopoly position. It might be something we call or what's known as the network effect. And the network effect is this idea that people visit a website, for example, REA or realestate.com.au, also known as REA Group. People will put their houses on that site because more people visit that site. And more people visit that site because there are more houses on the site. And so you have this virtuous circle, this wonderful effect where a company continues to dominate and it becomes a winner-take-all scenario when everybody gravitates to the site that has the most product that they're looking for. What's important is a solid and consistent track record, not by itself, but because it indicates that the company might have something special going on that makes it a better company than its competitors. And if that's sustained, it will take market share, grow more profitably, and dominate its particular industry. So you have a look at Disney, for example, and Chris, you mentioned Disney just a moment ago. They have bought, for example, when you say the word Disney, the share of mind is enormous. And what I mean by that is when the word Disney is mentioned, people immediately think of Disney characters. You know, they immediately think of Mickey Mouse and Daffy Duck and Donald Duck, and your memories are almost intertwined with Disney cartoons. What might not be familiar or might not be well known to people is that they also own Pixar. They also own Marvel. So the Iron Man series of movies, Marvel comic movies, they own that suite of share of mind movies. And so this is what happens when you get a network effect, when you get more people sharing stories with their children that are Disney stories because they're safe to read for their kids and they're not going to be surprised by double entendres and innuendo, then they tend to dominate, they earn more revenue, more people start going to those products, they can use that revenue to buy competitors, and it continues. So that's one of the indicators that we're looking for, a sustainable competitive advantage. And we ask the simple question, is this company going to be a lot bigger in 5, 10 or 20 years' time? Now, what I know is that most investors don't ask that question. And the reason why they don't ask the question is because the answer raises more questions requiring more work that people don't want to do. I'll give you an example. let's take a company that manufactures the seats that we're sitting on today. Think about that company for a moment and ask yourself the question, do I think this business is going to be substantially larger in the future? Well, the answer to that question might include, well, I believe the population of Australia is going to double in the next 20 or 30 or 40 years. There's going to be a lot more bums on seats, therefore they're going to sell a lot more seats. Well, that's part of the answer, but it's not enough. What is going to stop the business from dominating? What is going to stop the business from going out of business? Because we know even in growth industries, there are companies that go out of business. We've seen that in aircraft manufacturing, we've seen it in locomotive manufacturing, in the manufacturing of televisions, we've seen companies go broke. Hundreds of companies go broke in the manufacturing of televisions. We've seen the same thing in the manufacturing of automobiles. So it's not enough that a company is growing, that an industry is growing for a company to grow as well. So you have to look, therefore, at the competitive positioning of the company. And this is where this slide, Top-Notch Leaders, comes in, because it's really important that you've got leadership in an organisation that can actually drive the competitive success of a business. Realestate.com.au and carsales.com.au and Seek are benefiting because they got in early, they won the network effect battle, and now it's really just a question of time before they dominate and take all of the market share. But have a look at what's going on in those companies overseas and ask yourself whether they're replicating that success that they enjoy in Australia overseas. The short answer is they're not succeeding as well overseas as they are in Australia, and this comes down to management. If they're not able to replicate their success overseas, it's often because management are simply stretched too thin across the whole business, and the best return on their time is to devote their efforts to the local business that is going very well, because then they can attribute the success to themselves, and then of course they get paid more. And this is a very cynical view, but it's something when we talk to management we're very concerned about. We want management to be able to replicate success and repeat success. Now, how do you find a good manager? Well, of course, what you really want is a great business first, and that's why Skaffold's so useful, because we're looking for businesses with high rates of return on equity, little or no debt, that may indicate a competitive advantage. Then what we're after is good management to continue to drive that competitive positioning of the business to sustain those high rates of return on equity without the need for debt. But what's really important is that they can expand the business, because Australia is such a small economy, expand the geography of the business and the geographical reach of the business, and that really requires a track record. So we want a business that's good, that's high quality, with bright prospects, married to great management, but it's not enough to have a good business without the good management. First prize is both. So look at the history of the performance of the business to see whether or not management has been responsible. And here's the thing, a lot of investors don't do enough work on finding out how much of the track record of the business the current management was responsible for. So if the business has been a success for 20 or 30 years and management has only been in place for 2 years, current management, well, you need to ask yourself, how responsible are they for the past success? If they've been promoted from within the business, they could have been responsible for that success. But we're looking at Woolworths at the moment in a lot of detail because we think that its day in the sun is over, and we think its blue chip status has probably ended. And management comments in the media suggest to us that they really don't have a response to the Aldi threat at the moment, and management is really relatively new. There's even been talk about whether or not Roger Corbett would be brought back into Woolworths, maybe as a consultant to help them with their strategy. It's really important to go back over historical annual reports and have a look at all you need to do is look at the letters from management. So look at the letters that are written to shareholders each year from the managing director or the CEO and the chairman, and have a look at how often that's changed, and then have a look in Skaffold at the return on equity profile of the business and see which managers have been presiding over the business during the various business cycles that particular business might have experienced. So low debt, high return on equity, management with a track record. I should say this, good management in a bad business is not helpful. So it really doesn't matter who's managing an airline. The airline eventually will prove to investors that it's a bad business to own. And I'll turn back to Chris now.
Thanks very much for that, Roger. What I thought I might do is just
Investing in shares can be rewarding when you do your research, but it can also take up a lot of your time. With so much information out there, how do you quickly sort through the companies worth investing in and those to steer clear of? Skaffold is my research tool of choice. It tracks and reports on all ASX listed companies, plus thousands of global stocks daily, helping me decide which stocks to buy and sell. I can quickly filter through the reports to get the information I need. The rating system is like a set of traffic lights for the stock market. Green is good, orange is caution, and red is don't go any further. Skaffold's top stock choices have been highlighted for their outstanding performance by Money Magazine. With Skaffold doing the work for me, I have the confidence to make investment decisions without having to spend hours sifting through financial data. Now you can take control of your time and your portfolio. Why not take Skaffold for a test drive today?